Nvidia stock investors got some good news from the company's CEO as he highlighted the fact that he expects the company's gross profit margins will increase throughout 2025. And if you haven't been following closely, that's been a big concern for Nvidia stock investors. And I'll share with you in detail why that's the case and why Nvidia's CEO expects these margins to increase for the rest of 2025.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in a meeting with Wall Street analysts, Nvidia CEO said that our margins are going to improve. We changed the architecture of Hopper to Blackwell, not just the chip-to-chip name, but we changed the system architecture and the networking architecture completely. And so that wholesale change created headwinds for the company's production and therefore the profit margins because the cost per unit increased for Nvidia. Now, let me share with you the company's recent profit margin trajectory. So in the latest quarter, which the company reported on, which it was its fourth quarter of 2025, I know we're still not in the fourth quarter of 2025 in the calendar year, but companies are allowed to have fiscal years that are different than the calendar year, and that is the case with Nvidia. Their fiscal year is different than the calendar year, if you ever find yourself confused about their reporting. So I've highlighted its gross profit margin in the most recent quarter, 73% for Q4 2025. So that was down from Q3 2025 from 74.6%, and it was down from Q4 2024 from 76%. So whether you're judging the performance comparing to the previous quarter, or if you're comparing to the previous year, in both cases, the gross profit margin was down. Also, in both cases, the revenue was up. So revenue increased in the most recent quarter from the quarter before by $4.3 billion or 12%. And year over year, the revenue was up by 78%. And the reason why this is especially important in comparing with the gross profit margin is typically in businesses of this size, what you see is when revenue grows, the gross profit margin also increases. They go hand in hand for reasons like if you have manufacturing capacity to produce 1,000 units and you produce 900 units, you're not realizing the full potential of your economies in scale. So in a future quarter, when revenue grows and you're producing more, you're utilizing more of your manufacturing capacity. And so your cost per unit of production decreases, and therefore you generate higher gross profit margins. That's usually the case. But you didn't see that from Nvidia for the last 2 or 3 quarters. And that's why I highlighted in the introduction of the video, that's been a concern among Nvidia stock investors who are noticing this and asking, why is this the case? Your margins should be rising as your production, as your revenue is increasing. Your revenue has increased substantially in the last year from 22.1 billion all the way up to 39.3 billion, and yet your gross margin fell from 76% to 73%. We shouldn't be seeing this for a company like Nvidia. And also, we shouldn't be seeing this because Nvidia outsources its manufacturing. So it's not like it reached its limit and it needed to open more manufacturing. It needed to extend production. It didn't need to do those things. So the CEO here explained the reason why the margin was down, and he noted it was because of a wholesale change in the way they produce this next generation technology, which they're calling the Blackwell technology, compared to the previous generation technology, which they were calling the Hopper technology. But the CEO also said that they expect these margins to improve. And he says that we have opportunities between here and now, and that we're ramped up to improve yield and improve margins. So improve yield means produce more units. In the early days, in this new technology, the Blackwell technology, they haven't ramped up the amount they're producing yet. And remember, I said the more they produce, the more they can benefit from economies in scale and the cost per unit decreases. So that's where the CEO expects an area of improvement is they will be increasing production because they noted they are sold out for this technology. They just needed to get things right before they really press the turbo button and produce at max capacity. And so now the CEO says that they've got it right. They already sold a significant sum of this technology in the recently completed quarter, and they're going to ramp it up. And as they ramp it up, the cost per unit is going to decline, and that's going to improve the margins because they're not going to lower the price they're selling. The price they're selling is going to be where it is. What's going to change is the cost per unit in production. So he's saying very soon, starting almost now, you're starting to see evidence that in the future, these AI factories will be built even independently of these cloud service providers. He's talking about Amazon, Microsoft, Alphabet. And we're going to see some large AI factory projects, hundreds of billions of dollars of AI factory projects. But the cloud service providers will still invest and they will still grow. So that goes hand in hand with the company's gross profit margins. If they continue increasing production, increasing the number of units, they can continue expanding that gross profit margin, right? Because downstream, their supplier, Taiwan Semiconductor Manufacturing, which is one of their primary suppliers, one of their companies that they outsource manufacturing to, they have increased their manufacturing capacity significantly, and they continue to expand their manufacturing capacity. So this whole supply chain is working together between the cloud service providers, Nvidia, and Taiwan Semiconductor Manufacturing, and then even back behind Taiwan Semiconductor Manufacturing is ASML. So they're all communicating with each other, giving each other their timelines, their expectations, their forecasts for orders, so that they can all work together to serve this industry, to serve the growth in this industry, because these companies, Amazon, Microsoft, and Alphabet, they're going to spend over $200 billion on capital expenditures in 2025, which are primarily going into these data centers optimized for AI, which is where NVIDIA thrives in. So this was good to hear for NVIDIA stock investors that the CEO, again, reassuring us that their gross profit margins will expand throughout 2025, and it's because they're ramping up production, lowering the cost per unit, and thereby expanding gross profit margin because the sales are already locked in. They already have the purchase orders. They just need to manufacture and deliver these items to their customers. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.